Good morning and good evening, everyone. Welcome to Tech Mahindra's Q2 FY'25 virtual results press conference. Our leaders are in Boston today, and we sincerely thank all of you for joining us at this time. Before we proceed, I'd like to inform you that there'll be a Q&A session at the end of the conference. Today, we have with us Tech Mahindra's CEO and Managing Director, Mohit Joshi, and Chief Financial Officer, Rohit Anand. Without any delay, over to you, Mohit.
Thank you, Abhilasha, and hello, everyone. Thank you for joining us for our Q2 FY'25 earnings conference call, and we're delighted to speak to you again as we discuss our financial performance and strategic achievements for the past quarter. We continue to progress on our strategic improvement efforts, even as the overall IT services industry has remained soft. We have focused on strengthening client relationships and expanding the partner ecosystem. All of this with a sharp focus on operational excellence through Project Fortius, which has resulted in an expansion of margins for the third sequential quarter. For Q2 FY'25, our revenue increased by 2.2% year-over-year and by 1.9% quarter-over-quarter. By region, Europe achieved 4.1% growth year-over-year, and the rest of the world achieved a 9.7% year-over-year growth. The Americas was soft at a 2% year-over-year decline. We see weaknesses in the communications vertical, which posted a decline of 1.7% year-over-year, as our key telecom clients continue to prioritize cost savings and their spending on discretionary projects is constrained. The manufacturing vertical had a soft quarter with a moderate growth of 0.6% YOY, as the outlook for discretionary spending in this vertical continues to be conservative. Among the other focus verticals, BFSI reported a 4.5% year-over-year growth. In this vertical, we have strengthened partnerships with our existing clients and continue to see new logos signing on. We are focused on better utilization of existing capabilities, including those of portfolio companies, which is helping build the foundations for longer-term growth in the sub-segments of insurance, asset management, and payments. All other verticals have also seen positive momentum, with tech, media, and entertainment reporting 2.4% year-on-year growth. Healthcare and life sciences reporting 4.5% YOY growth, and the retail segment growing by 4.7% year-on-year. New deal win TCV for the quarter was $603 million and was broad-based across our key markets. We opened a new logo with one of the largest US-based cards and payment services providers for an AI ops-based production management for the bank's applications, in addition to a tech modernization program across application development and maintenance, data and cloud, and infrastructure engineering, making TechM the change the bank partner for the client. We were chosen as a partner to a European bank for a Temenos T24 implementation program to modernize the current core banking platform and to provide ongoing support of core banking systems post-implementation by leveraging our strong capabilities in core banking transformation. Tech Mahindra was selected by a leading European communication services provider for an autonomous operations program, enabling them to provide best customer experience and transform into a highly digitally mature and innovative operator by leveraging TechM's network services, ADMS, and AI capabilities for its business, IT, and workforce transformation. We were also selected by a leading Australian telecommunications company to deliver customer experience services and to support their journey to achieve industry-leading digital and customer service. We are excited to announce several new partnerships that will enable us to broaden our services portfolio and deliver enhanced value to our clients. For example, we launched a collaboration with Microsoft to modernize modern workplaces experiences with Copilot for Microsoft 365 for our customers and employees across 15 locations. This collaboration positions Tech Mahindra as a leading GSI adopting Copilot for Microsoft 365. We are partnering with Temenos to provide core banking offerings on their SaaS platform specifically designed for electronic money institutions in the UK and continental Europe. In close partnership with the International Chess Federation, FIDE, we successfully concluded the second season of the Global Chess League in London. This collaboration significantly strengthens our brand, aligning it with the qualities of intellect, rigor, and strategic thinking, which are central to both chess and our broader vision. Operationally, we made further progress in our efforts towards cost savings and efficiency. We posted an EBIT margin of 9.6% for the quarter, an expansion of 110 basis points sequentially, enabled by savings achieved under Project Fortius and with support from currency tailwinds. The free cash flow for the quarter is $157 million, and in line with our committed capital allocation policy, the board has approved an interim dividend of rupees 15 per share. Earlier this year, we had called out areas where we would make above normal investments to drive improvement to achieve our FY'27 targets. We will report progress on our key investment areas annually, but would like to share updates on some of them today. We have invested in strengthening the capabilities in the focus service lines by broadening the leadership and investing in technical specializations. We continue to invest in strengthening our fresher hiring program, building the right mindset and future skilling our associates by building capabilities in AI-first and cloud-first skill sets. We have created a next-gen skills framework for all of our IT associates, which would fuel career mobility among our workforces. We shall continue to invest in creating and sustaining an outcome-driven learning organization and cultivating a high-performance culture based on the pillars of simplify, clarify, innovate, and drive a high-performance orientation. It's also heartening that our commitment to excellence and purpose has been recognized. Navistar Inc. honored us with the 2024 Supplier Excellence Award for the fifth consecutive year. Tech Mahindra received this award for its performance, strategic alignment, and innovative ideas in sustainable mobility. We won the prestigious Diamond Supplier Award from Bombardier for the third time. This award is a testament to TechM successfully achieving Bombardier's operational performance standards in quality and delivery. We are proud to have won the 2024 Oracle Best in Class Innovation Partner Award for App Services Partners. Tech Mahindra has been recognized as one of the world's top 50 most sustainable businesses at SEAL 2023 Business Sustainability Awards, and we are amongst the Financial Times Asia Pacific Climate Leaders 2024. TechM is also one of the most preferred workplace for women 2024-25, recognized by Team Marksman. We were ranked as a leader in Avasant's Telecom Digital Services 2024 and placed in the leadership zone in digital engineering and ER&D services overall by Zenov, placed as a leader in Contact Center Customer Experience Services 2024, US Intelligence CX by ISG, and as a challenger in Gartner's 2024 Magic Quadrant for Public Cloud IT Transformation Services, amongst other analyst recognitions. We were ranked among the top 5 providers in the 2024 IT sourcing study by Whitelane Research, and also secured the second position in the customer satisfaction rankings for application services in Switzerland. Underscoring our commitment to sustainability, Tech Mahindra was recognized among the world's most sustainable companies by Time Magazine. Remarkably, we achieved the prestigious #1 position among all Indian companies. I believe that we are on the right path for a long-term sustainable transformation. Our leading indicators are moving in the right direction, and our scale at speed narrative is resonating in the market. This year, as I have mentioned in the past, could be volatile as we are in the turnaround phase. I am confident, however, that the platform is being set for a long-term, valuable franchise thanks to a high caliber and united leadership team and a clearly articulated strategic plan. We look forward to diving deeper into these topics and answering any questions you may have during the Q&A session. I now hand over to Rohit to elaborate on the financial performance. Thanks for joining us today.
Thank you, Mohit. Good evening, everybody. Good morning in India. Let me begin with an overview of the company's financial performance in the quarter. We ended the quarter with a revenue of $1.58 million, a growth of 1.9% quarter-over-quarter and 2.2% on a YOY basis. On a constant currency basis, it was a growth of 0.7% on QOQ and 1.2% on YOY. Translating this in rupee terms, revenue was 13,313 crores, a growth of 2.4% QOQ and 3.5% YOY. This quarter, the growth was led by communication vertical at 2.7%, followed by TME business at 5.7% and BFSI at 2.4%. Manufacturing declined by 4% as we see softness in the auto segment. We posted EBIT of $153 million or 1,280 crores, which is 16.2% increase over the previous quarter, and the resultant EBIT margin of 9.6%. Of the 110 basis point QOQ expansion in operating margin, about 40 bips is contributed by the forex movements, and the balance 70 basis point is improvement due to Project Fortius, which drive operating efficiencies and the savings under those. Other income was at 62 million or 521 crore, including gain on the sale of land of approximately $54 million. The effective tax rate for the quarter was at 26.6%, as we posted a PAT of 149 million, which in INR terms is 1,250 crores. PAT margin for the quarter is 9.4%. The free cash flow generated during the quarter was healthy at 157 million, translates into 105.4% of PAT. Cash and cash equivalents at the end of the quarter was 784 million or 6,566 crores in rupee terms. Based on the cash flow generation and a capital allocation policy, as Mohit mentioned, the board has approved an interim dividend of rupees 15 per share. DSO, including unbilled, was 94 days, which is an increase of 1 day on a sequential basis, but an improvement of 3 days on a YOY basis. The total hedge book stood at 2.3 billion versus 2.2 billion last quarter. And based on hedge accounting, net mark-to-market loss for the quarter was 3.6 million. The new deal TCV win for the quarter was 603 million. As Mohit mentioned, the highlight of the deal wins this quarter were strategic wins in the communication space, coupled with expansion of our BFSI portfolio, with the onboarding of 2 new logos, one each from US and Europe. While we continue to expand margins, we've also made significant investments for long-term sustainable growth. Some of the investments include opening of a new center in the Baltics region, bolstering our presence and service offering in Europe, expansion of partnership in AI, BFSI, and manufacturing segment to strengthen domain-specific capabilities, investment towards strengthening our capabilities in high-growth service lines. We also invested in modernizing the learning and the upskilling infrastructure to enable advanced skill development for our associates. The total number of employees at the end of the quarter was 154,253, including freshers we hired for more than 2,000, and on plan for the year of having more than 6,000 freshers. So to summarize this quarter, we see consistent performance around increasing deal wins, revenue growth, cost optimization, and a steady cash flow generation as we continue our journey towards FY'27 stated targets. With that, I'll take a pause now and bring it back for the Q&A to the moderator. Thank you.
Thank you, Mohit and Rohit. We will now conclude the conference. For those of you who've joined us on our social media channels, thank you again for joining us.